day today. Oil prices pulled back sharply. But despite the Dow hitting a 3-month high, more and more analysts are cautioning that a recession could be just around the corner. Joining us now to debate the issue, recession or not, we're going to be joined by Art Laffer. He's Chief Investment Officer of Laffer Investments and former economic advisor to President Reagan. And Peter Schiff, he's president of Euro Pacific Capital. Gentlemen, thanks for being here. Peter, I want to start with you. Although there are more and more people saying that the U.S. economy will be in a recession next year, it is still a minority position. Why do you think that a recession is coming, and just how bad is it going to be?
I think it's going to be pretty bad, and whether it starts in 07 or 8, I think, is immaterial. And I also think it's going to last not just for quarters, but for years. See, the basic problem with the U.S. economy is we have too much consumption and borrowing and not enough production and savings. And what's going to happen is the American consumer is basically going to stop consuming and start rebuilding his savings, especially when he sees his home equity evaporate. And when you have the economy 70% consumption, you can't address those imbalances without a recession. You know, rather than the recession being resisted, it should really be embraced, because the disease is all this debt-financed consumption. The cure is that we stop consuming and start saving and producing again, and that's a recession. And sometimes, you know, medicine tastes bad, but you got to swallow it.
Art Laffer, you hear him? He says the consumer's going to slow down in order to rebuild the savings. And you know that 2/3 of the American economy is driven by the consumer. Do you believe that?
No, I don't believe any of it whatsoever, Michelle. Excuse me. But, you know, what he's saying is that savings is way down in this country, but wealth has risen dramatically. The United States economy has never been in better shape. There is no tax increase coming in the next couple of years. Monetary policy is spectacular. We have freer trade than ever before. And not only that, but there are no incomes policies things here. I think Peter's just totally off base, and I don't think it's going to be... I mean, I just don't know where he's getting his stuff. The
well, one of us is
well.
off base, but it's definitely not me. I mean, it's not wealth that's increased in the last few years. We haven't increased our productive capacity. All that's increased is the paper values of our stocks and real estate. But that's not real wealth, no more than the NASDAQ was wealth. When you see the stock market come down and the real estate bubble burst, all that phony wealth is going to evaporate. And all that's going to be left is all the debt that we accumulated to foreigners.
Peter, I'm going to take a bet with you on this one. I'll bet you a penny on this one that if you'll sign a letter saying that if you're wrong, you'll sign a letter that you were wrong to me in this, but you're just way off base. There is nothing out there that tells us we're going to have a nice slowdown, but it's not going to be a crash.
Let me ask you this. A lot of folks out there point to the housing market and they say that a huge percentage of jobs created, some argue as much as 30% of the job creation over the last few years has been because of the housing boom, whether it's construction, whether it's mortgage brokers, real estate brokers, etc. And if that all goes away, what happens to those jobs?
There will be lots of things to fill it back up again, Michelle.
Such as?
You know, the neat thing about this economy is we have a lot of flexibility in what we produce and what we have in the wealth. And housing has filled a huge gap coming here, and other things will fill in that gap. It's really not a housing economy. This is an economy that's driven by good economic policies, by good monetary policy, by good trade policy, and it's working beautifully. And unless you change those, it just won't happen.
I suppose it's good if you're an investor in gold or oil or other foreign assets, but it's certainly not good from the point of view of the United States. And you know, from the real estate, it's not just the wealth effect or the jobs that directly come from real estate, but because we've had such artificially low interest rates, which are quickly going to become a thing of the past,
a lot of Americans... Hold on, Peter, the 10-year yield is still... You know, the Fed keeps going and going and going here, and the long end of the curve doesn't move.
Thank you, Michelle.
A lot of people have adjustable rate mortgages that are going to reset over the next couple of years, and people are going to see their monthly mortgage payments go up by 50%, 100%, and a lot of that is going to take a lot of spending away from the economy because people are going to be spending whatever money they have.
And what about the people who earn the interest, Peter? I mean, come on, it's a zero-sum game. Every interest dollar paid is interest dollar earned.
The people that earn the dollars are in China and in Japan and in Europe. They're not in America anymore. We don't owe it to ourselves. We owe it abroad.
Oh, my goodness. I have never heard so many mistakes made in seriatim in my life, Peter.
Well, then you ought to listen to your own clip.
Well, I do a lot, and you know, what can I tell you, Peter? It's a bet of a penny in your honor on the stake, and mine too.
Peter, when you talk about selling to China, to India, etc., what is wrong with that? If we are selling products, if they're buying products around the world, that lifts the entire global economy.
The problem is we're not selling them products. They are making products and sending them here.
We're outsourcing Alan Greenspan and Ben Bernanke to them. That's why they're holding those dollars. It's not as a favor to us.
Well,
My
sure
goodness.
it is. Look, we're running up $60 billion a month trade deficit. That means that the world is providing us with $60 billion more of goods and services that we can afford to pay for.
Peter, that's not true. No, listen, Peter, for 1 second. They are holding deposits in the U.S. not as a favor to us because they like holding them there. We are outsourcing our monetary policy to China and to a lot of the rest of the world, and they're paying us huge amounts of seigniorage gain for the act of providing them with a banking system and monetary policy. It's called seigniorage gain. Gosh.
All we're providing them with is inflation, and they're accumulating assets while we're accumulating liabilities. We've got to service this debt. We've got to pay interest on this. We're not borrowing to produce.
We ran trade deficits from 1640 until 1870, 230 years of trade deficits, and we built our country on foreign capital.
You're missing the most important aspect. Back then, we borrowed to build factories, to build infrastructure. We were borrowing to produce. Now we're borrowing to remodel our kitchens, to buy big screen TVs, to take vacations.
Peter, in all these years that we've been running these trade deficits, the wealth of the average American household has been going up.
No, it hasn't.
By what metric are you using?
The average American is going deeper and deeper into debt. He's struggling to get by. And all that happens is some appraiser tries to say that your house is worth all this money. This is an illusion.
Peter, hold on 1 second.
I can't help you.
What measure are you using when you talk about...
I'm using the household survey from the Federal Reserve Board, which shows American household net wealth. You know, he's using a savings rate measure from the National Income and Product Accounts, which is totally inappropriate for the purpose he's doing it.
Look,
and I don't know how to respond to it when he doesn't know the numbers.
Art, why do a husband and a wife both have to work to provide enough income to support a family?
Because they love the jobs at low tax rates. They like
working.
working.
Don't love these jobs. Are you kidding?
Of course they do.
Most women with children aren't working because they love their job. They're working because they need the income. They can't afford it.
Now you're going into
with lower tax rates, it makes it much more valuable to work. Gee, and lower interest rates, you can buy more. It's great.
I don't know, Peter. Are you suggesting that most women would stay home?
I think a lot of women, especially, I see women, 7 months pregnant sometimes when I'm out, waiting tables. They don't want to be there. They need to be there because their husband doesn't make enough after he finished paying taxes to support the family. But what we need to do in America is get back to the business of saving again and producing again. We just can't keep accumulating debt. We just can't put this consumption on a national credit card and assume that just because a crisis hasn't happened yet, that it's never going to happen.
I don't know, Peter. I would argue that a lot of women like to work, putting aside the women who are 7, 8, 9 months pregnant. But I think a lot of women enjoy their job and enjoy the privilege that men have had for a very long time, which is to get out of the house and be productive in many ways,
not
just
Michelle.
in raising children.
Thank you.
Gentlemen, I barely participated. I enjoyed that actually quite a lot, just listening to both of you go at it. So we're going to have you back again, Art Laffer and Peter Schiff, on whether or not we're going to see a recession.
Anytime. I want to collect that penny.
Thank you. Well, I'll collect it with a nice note from you, Peter.
In fact, that's about all the dollar's going to be worth is a penny.